The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman here. This is the Monday edition of the Tiger Technicians Hour. This is the 20th of March, and as you've probably heard by now, we're all absolutely devastated by the loss of our dear friend and absolutely wonderful technician, David White. Evidently heart attack. It was, we don't know, I don't know the real story other than that we've heard that he took himself to the hospital Wednesday evening, not feeling well. He was sent home and opening the door of his house, he passed away of a heart attack. And we know, for those of us who know anything about medical conditions, that the heart, if one is feeling ill and you're feeling that there's a chance of a heart attack, the quicker you get to the hospital, the greater the chance of success. When I mean success, well, I've had two of those things, and success is that you at least have a really good chance of living the life you were leading before under certain conditions. And that makes it even sad. And a young man, 58 years old. All right, what can I say? Dow's of 329 to 32,189. This is a really important moment, because if you can get the sandwich effect, the green candle, big green candle followed by a big red candle with an inside bar, in other words, lower high and higher low, and the following big green candle takes out not just the left side high, that's this bar that was on Friday, but actually closes above the bar that was the sandwich on the left side, which is Thursday's high. That would be really important. It might be a struggle, because at this point we really just have an oversold bounce, is all we can call it. But you can see that within the context of patterns, that, and I'm going to go through this. I did this for my subscribers on to the opening call in my hour-long webinar that I usually do over the weekend. Let me just do this now. I'll pick this up now. It'll just make sense in terms of what we are looking at. I'll go to this black background chart here. The reason why I moved from black to white years ago was because for people who printed out charts that I showed, to go print out a black background chart is crazy. Okay, so this is what I've been talking about. Here's the Dow, just one simple trend line. I made it too because I have a technique that I call the inside track, and it says that whenever a price gets in after trying to rally and gets repelled from this diagonal trend line, either up or down, that's called the Chapman wave inside track repellent zone. But once you break above it, it becomes the propellant zone. Well, lo and behold, if you look at this pattern, look at the Chapman wave, we look at arch formations, and an arch can become an M. That's what we're looking at. And there we are, right here. That's the reason why I make this a little bit bigger as a mini channel, is because I want a little room. I want a wiggle room for the upside and the downside. So we wiggle, and it goes below the green line, just touches the pink line, and now we're above it. But you see this pink line here, you see this inside, it says L, and then it says S. This is the Chapman wave. This is what I had someone do for me to show what happens when the 9 goes over the 14. It becomes green. When it goes under it, it goes pink. Very simple technical indicator. And what it's been pink since that top that was made. In fact, talking about David White, David got that exact doji candle high. I can't remember the exact date, because that was the date that we looked at it. We were looking at it in a different way. 33,572 on the Dow was a trend line, and it got there, and that was the exact doji candle turnaround for a very sharp move down, which Dave White got almost all of it to the downside. Fabulous move. So we are looking at the opposite side. We're looking at the long side here. We've been long. We had some nice gains on the very short-term long side. That's what we've got now. Look at this. You've got the S&P It's the same thing, going all the way to the high that was made back in January of 2022. We've got this trend line. As I say, I make it a double trend line. In other words, it's a little mini channel, green on the upside, red on the downside. And we've gone back above it. So that the resistance, the repellent zone is now the propellant zone. It's got to work. Otherwise, if there's a fall back again, let's say to the 30, I'm going to make it, say, 3760 area at any point in the next couple of weeks. That's a big deal. Look at the QQQ. Way above, and the green, it turned green in the 9-period moving average. It's making a little double top. But look how nicely it had this repellent zone. And look how simple, I could even make it a one trend line, right? I love this when you can just do something so simple and really gives you guidance. It's not like you can use this as your foolproof way of dealing with things. Because look, you saw in the Dow, it slipped a little bit under it. You saw in the S&P, that actually slipped under the pink line. But this gives you the sense that as long as the price is moving up, the MACD's up, the stochastic's flat at 85%, this is still a good sign for the Qs, even though it's pulling back today. Look at this, IWM. Here's the difference. Now we're tucked into it. Out of 5 sessions, 3 of them have gone underneath the pink line. This is your crucial line. Trying desperately to turn up. The pink is still strongly pink. The MACD is still very weak stochastic. So that's the Russell 2000. Very weak action. Now what do we get? We get gold. Gold is pulling back today. Now it's down to at 1970. But what's happened is within the, I don't like to do too much on this particular chart. No, I'm not going to. I'll show it to you. Let me just show it to you here in the gold chart. So this is the gold chart. That was a daily that I was showing you with the black background. This is your daily here. What do we always look for? In the Chapman wave methodology, we look for the identifiable low bar and then merely count each successively high. We alphabetize each peak on the upside, A, B, C, D, E, F, G. There's never an H in the Chapman wave methodology. And it's the same thing on the downside. On the upside, we use uppercase to show this is on the way up. On the downside, we use lowercase to show on the way down. Just a very simple technique. In other words, I grade each successively high peak. It's a technique I developed way back when I used to hand chart back in the 1980s. And even hand chart, I got somewhere over here. I've got the Dow hand charted to the high that was made in 1987. So it actually goes on a little bit further than that. But now what's really important is at D, other things can happen, and it's D in the weekly chart. And if I put this together with, look at this. If I put it together with the FAZ, F-A-Z, I believe. Yep, the 3 times short. Look at this. FAZ made a little doji candle the other day. That was Thursday, Friday, Monday. Yeah, on Wednesday. It went to a fractionally higher high on, this is 3 times short, the XLF, the financials. And look what's happened. Even with all the bad news on Friday, it never took out that Thursday high. It's in a leg E with a silent Chapman wave silent doji candle. That's usually a clue to say just be careful, because if you were doing a scan, you wouldn't find the high, because a doji candle at the high, because it was the day before. It says if there's a sharp pullback, if this FAZ goes under 223.31, I think gold will pull back with the financials round.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. Basil Chapman here. This is the Tiger Technicians Hour, and we're looking at the S&P E-mini is up 17. So I was talking about doji candles and the Chapman wave silent doji, which occurs either at the bar before a high or a bar after, or a bar before a low and a bar after, and it's something you don't see, but it's just a clue to say, hey, watch, because the technicals might be deteriorating because it's a moment of indecision. Well, look at this. You got your peak D in the 1 minute chart right there. It's pulled back a little bit. Now the pattern that I call the dreaded H is quite pronounced. So if we take out the left side low, you can go quite a bit low. This is going to be really important. Look, the MACD is weak. Stochastic is very weak. On balance volume is weak. But the 9 hasn't crossed yet. Oh, there it is, crossed negative, and now you've gone underneath. This is live. There's nothing I could make up here. There's the pattern. Not only that, if you're looking at the 10-minute E-mini chart, this is the June, you're looking at this beautiful symmetry. Here is, now sometimes I like to choose the very low of a move down to say there could be bar symmetry between the number of bars on the left side going down or going up, and the number of bars on the right side going back to that same level, either up or down. Well, the first one was right here. With this, I used the exact plumb line of the low that was made right at about 4 this morning. I wasn't up, thank goodness. No, I used the one next to it right there. Right there. Okay? And then what happened was it did that. It did a price movement. It went to that level in the exact same time. And then I said, okay, now I have to use a different left side low because it looks to me like I have to go back to this particular low right here. And I drew the cup. I always look at patterns, either a cup formation or an arch formation or a straight line. So I went to the high that was made at 20. So that's at 8 p.m. last night, right there at 8:30 in the evening, Eastern time. At 3978.25, we come all the way down to just under. Remember the blue line? I said I'm going to keep this in. I don't usually like to make things messy, but I do like to. I'm going to every once in a while. There's a particular trend line. It's diagonal or it could be horizontal. In this case, it was the midpoint of a narrow channel. And I always discuss long narrow channels as being hazardous to your wealth because you think it's going to break out and it doesn't. It comes back to the bottom line and you think it's going to break down, it doesn't. It goes back up to the top and comes back down. And once it goes there and it gets to a D, if it starts to break halfway into that rectangle at that particular point, it could go all the way down and take out the low. Well, this particular one made an H pattern that went to a cup formation. This is the last one that you can see at 11 o'clock around on Friday, I think it was. Yeah, on the 17th. Now, yeah, 17th. So, wait a minute, that was, yeah, Friday. So now what we're looking at is this one goes all the way back to about a week and a half ago. And I said, I'm just going to keep it there because when I used to hand chart on engineering paper, I always was absolutely fascinated that a line that I had drawn a long time ago suddenly became really important. How did it even know? Well, in time and price, the longer you stretch either one of those out, you're going to hit a particular level that you had looked at a long time ago because just the sheer movement to the right side of the chart takes you there. Well, look at this. We went all the way down, tested it twice at 3 o'clock this morning, and then again at about just after 4 o'clock, near 5 o'clock. We went to that blue line, and that became the trigger. And I thought to myself, is this going to be, when I looked at it at about 6 o'clock this morning, I said, is this going to be a 2-click session that if you were up at that particular time, you could click your buy, and you could just sit here and wait and wait and wait. And there's a chance that if the market survives into the second part of the afternoon session, that is Eastern time, that you could hold this all the way through to the close or at any time and have your second click just to get out of the trade. And I think there's a chance that it does it today. There are so many cross currents with the tide saying, I kind of want to move up. That's what I'm thinking right here. So just very short term, we made that peak D, we've pulled back. That is on the 1 minute chart. You've got my automated Chapman wave support and resistance lines right here. 39.53 is important. 39.75 at some time today. If it's able to break above that, that's going to be really important. So we've got the left side, right side price time match there. It just missed it by a couple of points and about 3 or 4 bars in the 10-minute chart. Now let's go back to our story, because this is going to be, when I say an important week, no, 3 weeks ago, that's 2 weeks of actual trading. That's last week, but the week before I consider to be, for me, a really important move as we got into March, because I look at 6 to 7 month intervals, and I've got this October, September that we've seen over the decades, not the years, but the decades, where sometimes you can get a major low and it's a fabulous rally, but all the way into the next 6 to 7 months, maybe it's, if it's October, it could be September, where you get a test. And at that point, I'm always watching the semiconductors and I'm watching the S&P, because there's a rotation in history where sometimes they're absolutely together, but sometimes one of them is stronger, and it's usually the semis are a little bit stronger than the S&P on that final test. So I'm thinking this month, March, is going to be really important, because what are we looking at right now? We're looking at, and I'm going to show you the gold chart. This is the daily. This is the monthly leg D. This is the daily. Brand new leg, gray leg A, because I haven't really got a confirmation finding the MACD's up, but the stochastic's still only at 47%. I have to wait for the month to finish, because you can see L right there. That means the line has finally gone over the 14 in the gold continuous contract. And I do think that gold is in play here, because this is not going to resolve the financials. Books just like that. Although I must say, we got into Schwab the other day I'm going to go back to something in a moment, but I just need to do this because it's all linked to my discussion right now. So SHW, I discussed this, and I said there's a technique in the Chapman wave, one of the myriad techniques that I've developed, where I call this the Chapman wave price volume climax. So many times I don't look at them all, but every once in a while there's a particular chart that fascinates me as it's going down, 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 and then it gaps down huge with volume exploding like it's not even, people say, what percentage are you looking at? I'm not even looking at a percentage. It is just so obvious. Look at this bar in volume. I haven't got a volume bar in the weekly. I've got the on-balance volume. But in the daily, look at that volume. And that said to me that there's a really good chance that the technique that I developed that says if you get this volume explosion and then there's a gap down and it fills the gap very quickly, there's a really good chance that that stock will go 28 sessions without taking out that low. And if it holds very well for the 28 sessions, it could go 56. Well, we didn't do anything. Then I said, okay, we're going to get a trade just to see as part of this particular technique. And I also thought that Schwab, I was a little upset that I heard that Schwab himself had bought shares. Just everyone was recommending it the day that I decided that we would get in. And what happened was it pulled back a little bit on Friday. It was good. And then and I said, no, well, I'm making a tight stop. I don't see that this is something right now. I just need to give it a little time. It's part of a technique, but it could still come down without taking out 45. I just said, we're out. Let's just watch it with that technique. Well, lo and behold, today it pops up to the 59.97 level.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So the sum of it is that we had a small position. I decided it's just the financials have not resolved yet. And that's just because of that. Under other conditions, I do believe the public is coming in droves in the market. That's what I've been looking at for a while. IBKR, let's see, this is Interactive Brokers. You could see that. Then there was a very sharp pullback. That's because of the financials, and the whole brokerage sector itself came tumbling down right to the 200 period. Moving average IBKR up 267 today at 78.51. But that peak G in the daily, that peak D in the weekly, and the leg E up against the Chapman inside track repellent zone just says to me, Yeah, just at the moment, let it resolve a little bit on a purely technical basis. It is oversold. It could bounce IBK to the 79s. I don't know if it can hit the 81 level of the 14-period moving average just yet, but it's much better. Okay. Couple of things. Okay, so I never finished that. I was showing you the gold chart. And what I wanted to mention in the gold chart is that the technicals, if you look, the price is way above the 9-period moving average. It has a close. Has it closed once above the high that was? I don't like to type in the prices here because this gets smoothed out and I have to move everything around. This is the Chapman methodology here. Unlike Steve Rhodes, has done a really good job. He has the Chapman notations, and they are automated, so they stay there. Here I do everything by hand. Every single chart, 1 minute or whatever it is me by hand. It takes me seconds, you can see, but anyway, that's the way it is. That high there is at 1975.2. The close on Friday was 1973.5. So far it hasn't closed above that. It needs that to be able to say, I'm turning this into a very good support level. Even if it pulls back a couple of points below, it should go higher. Now it's saying this leg D with the 9-period moving average very strong over the 14, with the MACD in the daily very strong, with the stochastic flat at 87, but the on-balance volume, the blue line, is getting a little bit overbought. It says now we've got to watch this closely because you do have a leg D with the technicals still very good in the weekly chart, but not quite as good as it is in the daily, and the monthly needs a lot of work to be able to repair the damage in that big pullback that was from early in 2022, going from the 20s down to the 1680s, I think. Okay, so actually more 1640s. So this is what I'm looking at now. Gold is telling us, because it's the go-to place when the financials are in crisis. It just always has been, and I think it will always remain that way. Looking at silver is actually moving quite nicely to the upside. It's playing catch up. Remember I said a long time ago, just in my experience, that gold does well and silver kind of lags. Then finally silver catches up. And then gold turns around and says, hey, what's going on? Gold's gone up without me, and it tries to catch up. At that point, silver starts to stall, and then it comes down as gold makes its recovery high, and then they all come down together. And that's kind of Humpty Dumpty. That's what we saw over there, right there with that high that was made with a retest. So that was the high from December of 22 in the 25s in silver, pulls back to the 23s, 2022s actually, and then it has one quick pop, and that was a pop in February the 2nd to 24.88 in the continuous contract. But look how weak the technicals were, and then it came tumbling down through the 200-period moving average. Now the 200-period moving average is really a support level of 22.07, and the price of silver at this particular point is up 0.10 at 22.57. So now it's the same thing again. Gold had this really spectacular move. Now silver's catching up. So they're rotating through. But as I say, gold is really the issue. Gold was the go-to place because of this is my interpretation, because of the financial crisis, and now silver's playing the catch-up game. Now let's just do this real quickly. High-grade copper, still very weak, right? You remember I said how this magnet of the 200-period moving average, it just becomes the sticky point where the price can go up, but it wants to come back down. When it starts to push away, either up or down for a considerable amount of time without getting closer and closer to the 200, the closer you get, boom, the magnet kicks in, and that's where it goes. So high-grade copper has been it's holding steady, but in the context of world economies, it's just saying copper is telling us that there is some kind of slowdown. We talk about slowdown. Look at wood, the iShares Global and Timber Forestry ETF made that peak D Joji candle above the 200-period moving average, and finally it's pushed far away. And this is telling us, you see, when it comes to the Fed, it is such a complex picture. You can make it as simple as you can, and the simple thing says, within the context of the Fed looking at interest rates as a mechanism in which to slow down the economy enough to get the inflationary prices down to the 2% level that they're looking at. They've got a lot of things going on. They've got the financial crisis. They've got the jobs. And I believe very much that within the next 3 to 5 weeks, we are suddenly going to get job losses. Suddenly, just boom, like the bottom fell out, and then the Fed the job's done actually. But now you've got that financial crisis going on in the background. And in fact, there are 3 or 4 different aspects that I don't want to talk about right now that are really important. But let's just go back to this area that I wanted to discuss, and that is to go to the dollar, to say the dollar is pulling back after that peak D just above the 200-period moving average. Look how important this 200 has been. It's like a magnet, and it hasn't been able to decisively trade. I don't mean cross over and close a couple of times. I mean trade much higher and get away from that 200-period moving average. Now with this peak D and the MACD turning down, Friday, the 9-period went under the 14. That's a weakness. So if you look at that, an EUR USD, now this is why I'm saying that I think that gold is in its own orbit based on the financials. Why isn't the euro-dollar currency pair screaming up to the 1.09 level? Instead of it's stuck down here, using the 200-period moving average as a trampoline, but still not getting the real ictus, the move to the upside. And all I can say is if you put it together with everything else, it tells you that gold is the insurance policy that countries go to when there's some kind of financial crisis. And here is the US dollar, Japanese yen currency pair. Look at this beautiful arch symmetry, came back down, went to a peak G. Look at this cup symmetry. And the way markets are so synchronized, if you can look at them in a pattern format. Well, look, you've had from that high that was made right there back in December at about 137, 138, you come all the way down to this low. I said I can't use this low as the fulcrum, the plumb line. I'm going to use that line. Look how beautifully it worked. It went to a peak G doji candle, and now it's below the 200-period moving average. So everything is in sync to say a lot of work has been done for us to attempt a market rally. But to get that market rally, you do have to say some of the financial aspect. Now look at this, CS. This is Credit Suisse. I mean, really. A gap down from Friday at 2, and it's now at 0.96. So with that context, it's amazing that the market has actually held up well. And just as we go out, just one more time, I want to show you something that I consider to be quite important. I'm going to go right here, and this is what I discussed last week, and I did for my subscribers. I said, if you look at this chart, with the internal highs and lows, in other words, earthquake and then the aftershock, and that trend line, this is really an important moment. Look at that trend line. I'll be back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today. And try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So let me now go to some of the questions. NEE, which is Next Era Energy, holding nicely, but I discussed this in terms of a very quick, in the Chapman wave, a very quick peak A, peak B, peak C, peak D, with, well, going from 77.6 is a very nice move. It's about 9%. But the real issue is that it's bumping into a lot of resistance. And my thinking about the XLE is that maybe it's trying to form some kind of support here, but it really is under duress in the shorter term, has been. And let me just show you something here on the XLE. So this is, if I want to be, there we go. So here it's gone underneath what was very good support. And now this is a resistance level in the 80 area. It's trading at 77, and you've got 82 as the 200-period moving average, and you've got your arch formation in the weekly. S&P Select Energy Spider Fund. I just think that this digestive phase needs to continue. Look how many things have gone right. Crude oil, I was speaking to someone just a short while ago. Crude oil is down at lows that we haven't seen since early 2022. Wait a minute. Anybody go to a gas pump lately and see the prices at the level it was in 2022? No, it doesn't work that way. Why? Because the irony is that, especially with today's electronics, but remember, they used to walk out with a ladder and climb up the ladder to say, and do it within minutes. They'd stop everything and say, hey, quickly get there and raise the price by 0.9 or whatever it is, or 30 cents. But coming down, they just don't seem to find the ladder. But now it's even easier. They've got the electronics. They just have to press a button. And they can't find the button. That button was right here. I could see it a moment ago, and now it's gone. So that's one thing for the Fed. We've got the decrease. If you look at wheat, look at this. Wheat is way down from up in the continuous contract was up in the 1300 area, almost 1400. Now it's at 697. If you look at soybeans at 1474 was once in the 16 or almost 1600 in the continuous contract, plummeted to 1312 in July of 2022, and then ran up, but now it's starting to pull back again. If you look at corn, as we say here in the Boston area, look, it's in this trading band, but it's off the highs. If you look at sugar, which is part of the DB Agricultural Fund, which we are still long, that's had a very big move up, but it's not the same proportion. The proportionality of sugar to the grains, I mean, as important as it is. So I think that the Fed has crude oil, all the agricultural products, but you don't see that in the supermarket because they take a long time to find that little card that says a lower price. So that part of the Fed's work is done. When it comes to jobs, look, RHI RHI is Robert Half International Recruitment, temporary jobs staffing. It makes a high back in 22 at about 126. It's trading now at 75. I would say that that is a very deep correction. And look at this price, left side, right side price time match going to this bottom that was made last week in the 72 area. So look at this. Yes, the if you look at the TLT in the longer term, this is the bonds. Yes, you've had a big move up in yields, obviously. 179.70 in March of 2020 comes down to the 90. Was it 91 we were looking at as the left side, right side price time match? So what we're looking at here is that yields absolutely have been higher, even on the shorter term. TBT, there we go. Even if on the shorter term, you've seen, there it is, yields rally sharply and then come back very sharply, retesting. Remember, I'm looking at these arch cup formations. The sine wave goes cup up and then arch down. And what was the left side low we were looking at in the TBT? This is the ultra short Lehman 20-year Treasury bond ETF, 2681. What was the low? I think it was a week ago, 2675. 2671, didn't I say? No, 2681. It went to a lower low and now it's a little bit higher. So you can see yields are, in a way, yes, they are the issue, but they've just been in this trading band. So I think that the Fed, quarter point, no point, whatever it is, I think the market is just working its way through to say the Fed's, a lot of the Fed's work has been done. If you look at CTAS, remember, we love to look at this for years, decades actually. I've been looking at Cintas Corporation overalls, uniforms. It's doing very well. A 470.23 was the high in December, which was the left side, right side test of 461.44 from December the 17th of 2021. A year later, it's already plunged to 340 and it comes back again. So this is saying that you can understand the job issue, because this is saying that jobs have been there, because if you're getting your overalls and uniforms and rentals, if you're looking at Marriott International, Marriott has done very well. 195.90 was the high, I think it was, back in December and 2022, April, and it pulled back sharply to the 130 area, and now it's holding very well within this rectangle. So you can see, if you look at this as objectively as you can say a great deal of the Fed's work has been done. Now it has to deal with the uncertainty. Remember, I always say that people constantly refer to the market in terms of the market hates uncertainty. I say, the market lives in uncertainty all the time. My expression is the market hates uncertainty about uncertainty. And that's when you get even once removed, let alone 2 or 3 times removed from not knowing what's going on, then the market has a conniption. All right, within that context, let's just get to other things that I want to, questions came about. Oops, where was it? Could I look at TNX? Yep, there's the TNX. And there it is on the 200-period exponential moving average. So this is the 10-year Treasury note. So with the Treasury note has pulled back in the V-shape, upside down V-shape or arch formation. 33.34 was the low, I think, of the 1st or 2nd of Feb, and the low the other day on Thursday was 33.69. We came within pennies, and now it's kind of stuck there. All right. So with that said, I am moderately optimistic. I kind of like what I'm looking at right now. I'm talking about, when I say right now, I mean over the weekend, going into today. Reason why we're along the UDOW. We're long from October of last year. That's both the diamonds and the Dow. The Dow itself, the diamonds, that's 121, the Dow, and 3 times long, the Dow. And the only reason is, within the context of all these different sectors within the Dow, let me just Okay, that time's just flying. Okay, within the Dow itself, that chart is at a very critical level, but that unbalanced volume in the weekly chart and the daily chart is suggesting that just at this particular one, we are so oversold that the market is ready for a bounce. I'm only calling it at this point, a bounce will go step by step.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with a 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, Dow's up 294, the S&P's up 22. What we're looking at here is an attempt. See, there's so much work to be done on the daily chart of the Dow. Look, the MACD is just starting to move up. The histogram's improving, but that 9 period is way under the 14. To get it to close positively, to cross positively, you'd have to see the Dow up at the 32,700, 32,800 level. That's going to take a lot of work, but I do see a reparation going on here in terms of trying to repair some damage that's made. Different chart in the S&P. Technically, it's getting closer to the MACD crossing positive, and it's doing okay. So all of these things are just okay. To really start to get a move that has legs meaning 2 to 3 weeks, or at least 5 to 9 sessions of upside move, you're going to have a lot happen. Now, what's really impressive is that the SMHs are holding well. Not so much today, they're down 46 cents, but those semiconductors and the QQQ are going to be the clue to sustainability of any move to the upside. I haven't spoken once yet about the VIX index. So the VIX index had a plunge today. It's down 83 cents at 24.68. That's just telling me that there's a chance that if the VIX index can close closer to the 2310, which is the 200-period moving average, any day this week, then it gives that extra little impetus to the upside. But if for whatever reason later today, could be Credit Suisse, who knows what it is, if the 2730 level is hit, be careful, because that just says we're not ready yet. But my gut feeling says, well, it isn't the gut feeling, it's the feeling that looking at the different indicators, looking at the different sectors, even within the Dow, now you're starting to see it filter out to say some things can move up, and that's really important. So as we're about to wrap up, you can go to Steve Rhodes. Now I can only say Steve Rhodes coming up, then Thinkorswim, and then Larry Pesavento, and then that missing link, Dave White, will be missing link for us for quite some time. He's just a wonderful person, wonderful technician. Then, of course, Tom O'Brien. Tommy starts us off at 9 o'clock with the market kickoff. And, happy birthday, Tommy.